So we talked about the last, I think the one-on-one session part one. We talked about the top-down analysis while entries, like how we go from top down, from the top to from the higher time frame to lower time frame while looking for entries, right?
Yes.
So I think in this live session we're gonna see some examples from the market to how to apply this concept, I guess, because I believe I did tell you everything on that one-on-one session. So right now we're gonna see some
Yes, it is
examples.
okay.
Yeah. So we know that this is the US dollar chart, but I think the example. Give me a pair, okay? Give me a pair, any random pair you want me to study. Do you hear me? Bargain? Do you have a pair in mind? Any random pair?
It is okay.
Just give me one. Give me one.
Gold.
Suggest one. Gold.
Yes.
Okay, let's use gold. So, yeah, right. So, right now, what we see on gold, let's go from the higher time frame, from the 3-month time frame. What we would see if we do something like this, 3 months time frame. We see that we have some equal highs here, right? And we see that price has taken some equal lows here. Then it went higher to check these equal highs just by 1 pip. It's not 1 pip, but if you zoom in, I believe it's still high. It's still equal highs here, and we're still gonna see higher prices until if price check this low here. If price drop checking this low here, then we're gonna see lower prices for price to drop lower, maybe to this area here, to fill this fair value gap to this order block or mitigation block, or maybe to check this equal lows here, right? Until then, we still expect bullishness. Yeah, and we see that we have this fair value gap right here. I, for me, I believe that price is still gonna go higher from here without filling this fair value gap. And if it does, it doesn't negate our idea. It just price wanna maybe if price take this low, there is a higher chance that price is wanna go higher from this monthly BC. So if price check this low, there is a higher chance that you see it is gonna check this equal lows here to fill this monthly BC to continue higher. And then if price drops lower, checking us out, then we're gonna look for price to fill this fair value gap, right? Until then, we are expecting some bullishness from this monthly order block right here to go higher. And we have our confirmation once price has taken this high here. So this is our confirmation to be bullish. So I don't want to see price drop lower to check this previous monthly low. So it works as our invalidation point, because if price check this low, we could see some bearishness to drop lower to discount of this range, to discount of this range from this low to this high. If price check this low, we're going to see some kind of bearishness to discount of this range. On the weekly time frame, we are using what? We are using this range here. If you use this high to this low, what we have? We have our premium here and our discount. And we see price has dropped lower to discount area, filling the weekly BC, and we have a reaction from that weekly BC to go higher. Right now, price has filled the weekly CB, has stepped into the weekly CB and show some kind of reaction to drop fill this weekly BC, this right here, this small one here. Maybe from here, price could do something, go higher. because we're still expecting bullishness from this range to check this high here. This is our next round of liquidity as we have equal highs here. And as I explained, if price drops lower to check this low, we're gonna have another range that maybe price is respecting this range here, is maybe price is respecting this range, and we have a retracement to this fair value gap, and price it took this low, it is a confirmation to have maybe a new range, something like this, who knows, something like this, to look for another sale, maybe something like that. And that's what I was explaining to you in the top down analysis, how price, when a price drops to our level, we don't pick the low. We wait for a confirmation to continue higher, but we want to see also a break of market structure on a daily time frame to confirm that really price it is going higher. Do you understand?
Yes, yes.
So that's it. As here on the daily time frame, what we see? We see price has dropped to our range and we have our break of market structure above this high here. So we can say that price is maybe, if price is still didn't check this high, we could still be expecting some kind of 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 drop lower. So maybe from this fair value gap we could be expecting that. But this candle, this displacement closing above these bodies confirm that price it is going to check this high, and it did. Eventually it did, as a confirmation that price is bullish, right? But before that we had our break of market structure from here. If you see, this was our break of market structure, but once price took this high here, the big one here, it is a confirmation that it is going to take this, it is going to continue higher. And it's not only that price could check this highs as a buy side liquidity taken to drop lower, but it is a confirmation that price it is indeed bullish, right? So right now what we see price has break market structure higher. We have our reaction from this weekly CB to this weekly BC. We see that price is reaction to this weekly BC, and we have our new range, our daily range. Could say that price is now, it's still at premium. You could see some movement to discount here, or maybe if we use this range, price is already in discount, and we want to see some push higher, right? But until, where is the confirmation that we're gonna see this push higher? We wanna see first this high to be broken. So what I'm expecting next, maybe next, I'm expecting something like this for price to continue lower. It doesn't mean that I am I am not bullish on higher time frame. It's just that's what we have as as a information right now. I'm not trying to pick the low, saying okay, this is the low now, and we're gonna start seeing a bullishness. I want to see this high first to be broken. Until then, price is still bearish, because we could say this is a break of market structure. The price has went higher, maybe to this rejection block. Then we have a daily reversal candle confirming a break of market structure, confirming that this weekly CB is is a resistant price to go higher, from going higher. So we could be expecting something like this next week. Yeah, but it doesn't mean that price is bearish. It just means that I'm expecting price to drop lower to discount, maybe of this range or this range, at least to discount to this daily order block. If we see, that's what I am expecting next week. But if price take this low, I'm expecting price to check these lows, then to fill this monthly BC if price check this low. Until then, right now, what I'm expecting price to drop lower. So if we use something like this, if we go back from the monthly time frame or from the weekly time frame, we could say this is, like I showed you, this is our range that price has dropped lower. Could say, okay, could do something like this. This is the weekly time frame, which is the big one, right? Let's get rid of right? We have price went higher, then a retracement to what? To discount. And if we go back to the daily time frame, what we see? This is the daily time frame. We see price maybe from here. If we let me adjust this, something like this. Okay, we see price do something like this. Mm, let's do blue one. Maybe let's do something like this. Okay, see price make a low, a lower low, then a lower high, then a lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? This is the structure of the daily inside what? Inside the weekly retracement. This is the retracement to discount. We have a daily structure inside it. We have a daily ranges, right? And we see what? We see as this as a break of market structure, like I told you. Could say, okay, BMS on the daily time frame. Confirming price has shifted higher. So what we have maybe something like this for price to do this, right? So we have our new range from this low to this high, right? Right now, price it is retracement to discount. If we go to the 4-hour time frame, inside this daily structure, what we have, we're gonna have a 4-hour structure. Right now, this is what we have. If we use maybe block as 4-hour structure, maybe something like this, what we're gonna see? We're gonna let me do this. What we're gonna see, or yeah, what we have. This is the 4-hour. We have this high, this high, this high. Do you see this? We have a 4-hour structure inside,
Yes, yes.
something like this. Once uh, price here at this point, we had we had here the weekly is bullish, the daily was bearish retracement, then the daily has shifted to bullishness, right? So what we could say here, if we want to add, okay, let me add something. If we could say, okay, the weekly is bullish, right? The daily is bullish because we had this break of market structure here, but the 4-hour at this point here is bearish once it took this low here. Do you see it? This low is taken right here. Gonna gonna do something. Okay, 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 okay. Maybe highlight it with this. Right? This is the low taken. Right? Oh, that's good. Sorry for that. Let me just do something like this. Yeah. Right? Just to show you. Okay. Maybe. Yeah. This is our break of market structure, I could say. Right? Once price it took it here. Do you see it? We have our break of market structure. So once price it drop here, what we have? We have 4-hour bearish. Is it? So it is 4-hour is bearish. So what I'm going to do? I'm going to follow my 4-hour structure because Once price here is bearish, it went higher to this range here. We could use from this high to this low. We see that price has went to discount to this 4-hour order block. That's here. Let me zoom in. This 4-hour for the order block here, right? Then it shows this reaction. Do you see how 4-hour is bearish to discount? And don't forget that price, it is retracing to our discount level. From here, we expect some retracement to our discount level before going higher on the daily time frame. Right now, we are still following the 4-hour time frame. So what we're gonna be expecting next? We're gonna be expecting something like this, right? To drop lower to discount area, then maybe price keep dropping lower until we have a break. We're gonna keep selling here at this point. Price retrace here, sell, retrace here, sell, even if it is a discount here until price, because we don't pick the low, we don't know where it is the low, until price break a market structure. So once price break this market structure higher, then we're going to say, oh, we have a confirmation of this structure here. We have that the daily is bullish. So what we're going to have? I'm going to have, give me a second. I'm going to have, this is the daily. So price went higher. We have our tracement. While we're going to be expecting what? The daily to continue bullish, something like this. That's what we're going to be expecting now. And on the weekly time frame, we're going to be expecting something like this. This is the weekly time frame, right? Do you see? So the weekly like this, we're going to be expecting this. The 4-hour time frame. So from weekly to the daily was bearish here, then it shifted bullishness, then price it is retracing to discount. The 4-hour here is still bearish. So what we would be expecting, we still be expecting sales until this high is taken. So until this high is broken right here. Once this high is broken, we could say, okay, now what? Now price is now price is 4-hour, could say 4-hour is bullish. Then we're gonna be following the 4-hour structure, like price, some retracement here, and we're gonna have our range again, which is called to continue higher, then to continue higher, right? Breaking this high, once price break this high, we could be expecting, we could continue higher, but if price take a 4-hour low, then we're going to be expecting something like this to our discount. We don't want this low to be taken, as this is the daily structure, and we're going to have what, another structure like this. Do you understand this kind of stuff? This is how I'm using the daily, the top-down analysis. This is how was our theory, and now we are seeing it on the market, on gold market, right? So here, if we clean our chart right now, do you understand this? Just to
Yes,
pass.
yes, very clear.
That's great. So if we clear our chart, like I said, here we were expecting some bearishness. 4-hour was bearish here. We have the daily equilibrium here, from this high here to this low, could say this is the equilibrium right here. Okay, Okay, we have this as equilibrium. We have our 4 hour, our daily order block, bullish order block. This is the daily bullish order block. We have our fair value gap here. Dash price should fill. Do we have some sell side liquidity? This is a sell side liquidity. Dash price could check. And let's just use a replay button to better understand it. Here, right? So we have our sell side liquidity here. We have our break of market structure here. So 4 hour is bearish, right? And we have our discount range from this low here to this high. We are expecting what? Some kind of drop to discount, then maybe some kind of break of market structure to continue higher, or price could just do something like this easily. Yeah, until we have our break of market structure, we could be expecting bearishness, right? So here, as we said, 4 hour bearish, and right now let's see how we're gonna enter. We have our range here from this high to this low, right? We see that price has taken this high here. Once price it took this high here, it is a confirmation on 1 hour time frame. Once price it took this high here, we could say, okay, it is a break of market structure, BMS, right? For price to go to optimal trade entry, if we are using optimal trade entry right here, for price to go to optimal trade entry inside this 4 hour order block, because if you remember, this is a 4 hour bearish order block, this one. So price it took this high as a confirmation, it is retracing to discount to premium, price to drop lower. So if we go back to the 15-minute time frame right now, what we see? We see price has tapped into this level here. We're waiting for a shift in marketplace. I want to see price check this low before engaging with sales entries, because as I told you, we don't pick the high, and the hourly here is still bullish, because if you see price break market structure, it went higher, it traced to discount of this range from this low to this high, retraced to discount, then went higher. Then right now it is retracing. Yes, it is reaction for our order block, but it is retracing to this fair value gap. I'm not going to look for a buy entry here. As I said, this is we have a bearish idea, but I want to see first a confirmation, a low broken before engaging with this bearish idea. So we see what? We see price right now. We are waiting for the next day because this is late. We don't enter, and we have our agent range right now. We see price. It is going higher. So agent range has expanded higher, like I told you. From where? From our fair value gap. That's why I didn't want to sell here, because we don't pick the high until this low is broken. Then we're gonna confirm the sell. Now we want to see this low broken before selling. If price take this low, then we have our confirmation. Now to be bearish, I want to set displacement below it. We have the daily open here, the midnight open, could say. So this is the midnight open. Price has made now the high of the day at AJ range. We want to see price go above this high before dropping lower, or maybe if price take this low, I'm not gonna wait for that high to be taken. Then we see price do something like this. Went higher, check this high here. What is this? Oh, check this high here. If we line, what we see that Asia range has expanded higher, then price has dropped to optimal trade entry. This is, if you want to enter this trade here, this is a good entry for a scalp entry, not for a day trade entry, because you know that we are bearish, and if you enter here, this may be to target this high, then close the trade, not expect the price is going to continue higher. So what we see that Asian range has been expanding higher, right? So this is Asian range. Asian range, we could say expansion. London has given us an optimal trade entry. This is London OTE, right? Price to go higher, check into Asian range high, and what we would expect for New York. For me, I'm expecting a New York reversal. And if price right now, if price take this low, this is the reversal. If price take this low, and that's what we had. Price has taken that low, but we want to see a close below it. Then this is the confirmation. We have our New York reversal, so we could look for an entry now, maybe at 5-minute time frame. Where is it? Or 3-minute time frame, something like this. And this was the entry. I'm going to show you. I don't know if we have news this day, but this was the entry. If you enter, this is our fair value gap. If you want to enter something like this, maybe from the beginning with stop loss above this high. If we see the 5-minute time frame, no, I'm waiting. Sorry for that. Yeah, we see that price has rebalanced this fair value gap right here. Immediate rebalance inside this breaker. If you use this breaker right here, that's what happened, right? But for me, I like to enter at fair value gaps, so that's why I use this fair value gap here as 3-minute time frame for my entry. Do you still hear me? Hello? Because I don't.
Yes, yes.
Yes, that's great. So for me, I target 122. This is my target. If I enter here, I'm gonna target 122. This is my risk management model. If you have your risk management model, maybe you are targeting this equal lows here. This says the side liquidity below this equal lows here. So how much is it is gonna give you? It's gonna give you almost 4R or almost 5R, and then price is still dropping below this side liquidity as mentioned. It's 6R, then it is going to continue lower, and we have our target first, the equilibrium, then the daily order block, right? But for me, if I enter this trade live, I'm gonna close it at 122. This is my risk management model. I have reason for that. I'm not just follow your risk management model. We're not talking about risk management now. We're just addressing how to use the top-down analysis to look for entry. So if we see what happened this day, what we said, we said that Asian range has an expansion, so London has an OTE, an entry was a continuation, right? At New York, We expect a reversal. Why we are expecting a New York reversal and not a continuation? Because we are inside premium of this range, inside the 4-hour order block at this at also at optimal trade entry of this range. From this high here to this low, price has retraced to optimal trade entry into this 4-hour order block. So we're expecting some bearishness right here. And as we see that London has, it didn't show that bearishness from London, as price has find some support inside this fair value gap to continue higher. We could find an entry here to go higher as a scalp, not as a day trade. Then we see at New York we have our reversal, right? So I'm gonna show you a daily template. Just give me a second to look for that. Okay, okay, let's continue. I'm going to show you the daily template blueprint. This is mine. I made this because of my on how I study ICT concepts, and I've seen that the daily template. What we see, if you see what we had, Asian range expansion, right? Like I showed you, we had Asian range expansion right here. I want to zoom in. As I showed you, we had Asian range expansion. Let me go, maybe do it here, right? So we have
It's
Asian
very
range.
small. I can see you.
Can you see it or not?
Very, very small. I can see.
Yeah. Right now, can you see it?
No.
I'm gonna send you that. I'm gonna send it to you. Okay, just give me a
Okay,
second to
okay,
send
okay,
you
okay.
that.
Thanks.
Did you get it? Hello? Did you get it? Do you hear me? I sent it to you on Telegram.
Yes, 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 yes.
So, like I want to explain to you, just give me a second to start over. What we see that we have here on our daily template, we have Asian range here, expansion, Asian range expansion. So what we would expect from London's session, we have two things. Either we're going to have an expansion optimal trade entry and expansion higher in the direction of Asian range, or Asian range is going to be a consolidation. In this example, we have Asian range optimal trade entry expansion. Then what we would expect? We would expect either a New York continuation or a reversal. In our example here, we had New York reversal because the IF was bearish or the IF was not bullish. If the IF was bullish, we're going to have a New York continuation. Even if price take London low here, we could be still expecting a New York continuation if the IF was bullish. But as the IF is bearish, we're expecting a New York a New York reversal, right? So if you see the daily template, that's what I'm using. When I want to start, when I want to trade the day, I see what agent range has
That is
done.
your rules.
Yeah, this is my this is my rules, right?
I understand, I understand.
So I see my agent range, how agent range has reacted, and then I see how I predict, I expect how London is gonna react, then New York has gonna react based on London, right? This daily template that I sent you, it could be applied for the weekly template also, as Asian range the Monday candle or the Monday range, and London the Tuesday range, and New York the Wednesday range, and London close the Tuesday range, right? That's that daily template. I use it for the daily, for weekly, for monthly because price is fractal. So you're gonna have the same concept in every time frame, right? So do you do you want to talk about something else? Do you want to see another example? I don't know.
Everything is clear. I am really, really satisfied with this class.
So right now, maybe what we're gonna do right now, I'm gonna give you this a homework, maybe this one, USD, right?
Uh-huh.
Let's see, weekly time frame, and I want you, explain to me from this point here, from this low here to this point here. I mean, from Monday 10 October to Monday 24 July. I want you to explain to me what happened. Maybe weekly, daily, and 4 hour. Just three time
Okay.
frames. Weekly, daily, 4 hour. Don't look for entries. Just look for trading ranges. How
Okay.
the top-down analysis
Okay.
from this
Okay.
point to this
Okay.
point. Maybe, for example, just a start. What I want you to do. Maybe you're gonna have this as your range, and you're gonna look for how price has retraced to equilibrium right here, to this fair value gap right here. How price, explain me what price has done and how has retraced to this fair value gap to equilibrium, and now we are seeing bullishness. Just explain me
Okay.
from this point here, from this high to this low. That,
Okay.
that's
Okay.
that's our homework, okay?
Okay.
And do that in a PDF file and send me that,
Okay. Deal,
right?
Muhammad.
So that's great. So, do you have any other question?
No, no, no. Everything is clear.
So that's great. I'm gonna end it here right now, and let's continue another time.
Thank you very much.
See ya. Thank you, and
Bye.
bye. Bye.